Hello guys, welcome back to another video. Stay tuned because today we're going to be talking about the euro dollar and how that move just happened. We're going to be talking about the pound dollar, we're going to be talking about the US dollar index, USDJPY, and a bunch of other pairs. So stay tuned, stay with me until the end, because what Jerome Powell has said yesterday will shape the future of the market until September or December. All right. So if you're curious, if you want to know more about this, please stay with us until then. Now, before we start, subscribe to the channel and give us a thumbs up. I don't want to be, I don't want to be picky, but please guys, do that. It's good to us because we see what you guys are liking and we can produce more content on top of that. And it's good for YouTube as well, that promote our channel to a broader audience, okay, to more people watching us. So that's pretty good, I'm not gonna lie. And you support us, so that's awesome. Okay, so we did have the Jerome Powell giving a, well, it's not a speech, okay? There's a correct name for that. Let me check it here. They call these the testifies. So he was testifying for the Senate of the government. So it was pretty funny, okay, because we all know what Jerome Powell is from. Jerome Powell is from the central bank, from the Federal Reserve. And it feels like that the governors don't know what he does, and they were asking questions, no sense questions. So you don't have to watch the whole thing because it was 1 hour and a half around this. And I was up midnight taking notes so I could come here and show to you, present to you guys what it was talked to. And I have some topics here that I want to talk. I have 1, 2, 3, 6, around seven points that he was that was the most important points, and that will shape the market towards end of this year. And definitely, I want to talk about something that is going on. It's the US election, and is the Fed holding the rates until the US election, or is the Fed cutting the rates before the US election? And that would impact the market in a sense of people preferring Biden over Trump, or people preferring Trump over Biden. So they have to be very, very minimal approach towards that. But they have to be incisive as well on top of this. So lots of things to talk today, guys. So take your notebook and take some notes, because that will be very helpful for you. Okay, first thing is, I'm going to grab the euro dollar chart here. Euro dollar is trading right now at 108.17. And we had a drop pretty much from the 108.24 all the way down to 108.60 on euro dollar, and that was roughly between 1 hour and a half. That was the whole speech of Jerome Powell, and it shows to us that yes, the US dollar got pretty strong, and so the market was bullish towards that. Stocks was up, Tesla was up very well. Nasdaq and S&P 500, they were up as well at the time he was giving his speech. Testifying, that's the correct word. So the market took all of his comments pretty good, in a pretty good tone. Another point that I want to talk about is very, very interesting how the whole market was waiting for only one thing. And the one thing was, tell me, are you gonna cut, are you gonna hold, or are you gonna hike? That was the only answer the market wanted to know. And he sort of gave to us that answer on a very broad, okay? I think I've watched so many speeches from Jerome Powell that I can read him as a book. Like, I can look at him and I can guarantee to you that I see what he's talking. I can see if he's like talking truth or if he's talking lies. And it just comes with so many hours on the screen looking at him. So it's very, very funny. But okay, some of the points he said is easing too soon or too much could hurt inflation progress. Recent data shows modest progress toward the 2% target. So that was the first thing he said. When one of the members of the government asked him, look, how is you cutting? Are you going to cut? Are you going to hold? What are you going to do? Because we saw inflation coming down and now we're looking at inflation sort of stabilize. Is that the certain that you want from the inflation? And then he answers no. That's not what we want. We've seen a pretty good decline in inflation the past few months, but we looked it up as well. We can't forget that we did had an uptick on inflation this year. So since beginning of the year, we had much more higher inflation than lower inflation. So still a lot for us to do, to wait to see when we have more certain that inflation is coming back to the 2% target, then yes, we would cut and we wouldn't hesitate. But for now, we don't see inflation coming back to the 2% in the near term. So that's what he say, and the market of course took it very hawkish because that's not what he was expecting for the near term. So what he was expecting is high inflation, keeping inflation at this point. So he wants further progress on inflation to be 100% sure to cut the rates, and that's what he say as well. Maybe cutting too soon or too much could hurt the inflation progress. He goes ahead and say inflation has decreased but remains above the 2% target. He says that restrictive rates help balance demand and supply. Flexing too little or flexing too late can underlie weakening the economy. The gross domestic product growth appears to have moderated in this first half of 2024. And he quotes, inflation is not the only risk we face. He said that more good data would increase confidence about inflation and that the job market is strong but not overheated. So one thing here that I was actually pretty surprised what he say is that the job market is strong but not overheated. So pretty much he's not caring about the job market anymore, because the work that when he talked about the NFP, that we had a higher readings on the NFP, I can't remember the exactly same words he say, but that was what he said, the job market is strong but not overheated. That shows to me that pretty much he thinks that the central bank job on the job market, the labor market is sort of done. And they have to focus much more now on easing inflation, and of course doing the due mandate that it's easing inflation and bringing all the economy together, piecing all together. But still a very hawkish phrase for me, because he will hold rates for longer. Now, remember I've mentioned just at the beginning of the video that were a very peculiar moment and a very, very interesting moment actually, because they won't cut the rates now, they won't hike the rates now, but he stated that hiking the rates are not out of the table. Look, if inflation comes and continues to go higher, then yes, we would hike the rates. So it's a very tricky scenario. You need to have a very good risk management on those types of market, because you're thinking that the market is going on one way and snaps you out on completely another way, and you wasn't even expecting. So that's why I'm asking you guys to go to the webinars, because this is how you can, I can give you the context of fundamentals, and I can give you the data, the driving. Some traders are data driven, and they do trade through the data, but we tend to take the data, analyze the data, review the data, and put in the context of the economy, and then trade this context. Okay, coming back now. So as I was saying in the beginning of the video, we have elections coming up on the US. And interesting enough is that most likely, okay, this is my opinion, all right? I'm an analyst, but look, I can get things wrong as well. Financial market at not 100%. So one thing is I'm most likely towards the Fed cutting in December, or very convenient for them to not cut now. That's what they're saying, and cut 2 days after the results of the election, that it will be on November. So how convenient is that for them? right? Because November 5 is the elections and November 7 is the road decision. So we can just hold now and cut 2 days later. That's perfect, isn't it? Because, and then they cut 25 in November, or they don't cut in November and then they cut in December. So either way, November or December, all right? So that's my take. And then after that, they will cut 25 until 2025, that they will get to 2%, 2% rate. So that's what I'm expecting. Starting their transition from a hawkish scenario to a dovish scenario. And yes, the US dollar can feel it in a sense of a medium-term volatility of downwards, but most probably, medium-term volatility of upwards, but most probably on the whole scenario, we will see, of course, the US dollar progressively going down. When we look at euro dollar, pound dollar, US dollar index, US dollar CAD, US dollar yen, New Zealand dollar, and so on, I'm expecting all of the currencies with the US dollar to continue to have an upward effect, but then we revert the trend to downwards just for this week because we have the CPI tomorrow, and the CPI will be decisive for the Fed to take, are we taking, because he didn't mention anything about July rate. He didn't mention anything, all right, anything. So most probably the market is pricing November or December after elections, and on elections he will be more neutral to hawkish as he have been towards now. All right, guys, I hope everyone I could help everyone here. You could take something out of this video. If you do have a question, if you do want to feedback us, please just put down in the comments. And don't forget that tomorrow, Thursday, from 7 to 8 p.m., I'm going to be having my webinar. So it's very important for you to register for the webinar in the description of the video. So that way we can send you the link for you to join. And don't forget as well to join us on the Telegram, where I send, like yesterday, I was sending these live when the Fed was, when Jerome Powell was testifying. I was sending it live, okay? You can see it right here. That was midnight 10 a.m. So I was awake sending you content for free. We don't charge you anything. So look, choice is yours. Choice is yours. All right, guys, thank you so much. And I see you tonight. See you tomorrow night, or I see you in the next video. Bye-bye.